All right, what up, everybody? It is Jeremy from Escape Velocity Trading coming at you for the Market Bias Update Report on Sunday, June 16th. Starting off, recap from the previous week's trading. You can see I got blasted in the face for over $13,000 loss on a Bitcoin futures that I ended up having to close out. And if we look at what happened here, Thinkorswim actually had a technical glitch and wouldn't let me log in all day during this big red candle right here. And I had purposefully taken off my automated stops going into the evening because I was planning on waking up super early before economic data had been released, and I wanted to be in front of the market and adjusting my stops accordingly as I saw what was going on. Couldn't log in to the platform, couldn't log into the website, couldn't log into the mobile device. Everything was down. And so by the time I ended up being able to get back into the system and take my loss, prices had already started to bounce off of our support zone here at 66,000. That was also marked by the 50 period SMA. So anyways, long story short, ended up taking it on the chin there, worked hard through the rest of the week trying to get it back, and then got blasted on another one. Similar thing happened on my trading. That same day, I ended up having to lock a couple $1,000s in losses, worked to get some of that back throughout the rest of the week, ended up down 1,392 on my stock and options trading, and on futures ended up down a little over 15 for a total loss this week of 16,742. So obviously not the week I was hoping for, but if I do go out and look at the year-to-date profit and loss, I am still currently up around $70,000 for the year, and we are going into the second half of June, so I am hoping to at least break back above 100,000 again, if not clip closer to 160 or 170,000 for the trading year. So that is my current goal. So with that, let's dive back in to the charts, and we are going to start off on the S&P 500. You'll notice here prices on the futures have gapped up, but that is not actually a gap up in the chart. That is just the rollover of one contract for the futures to the new contract. So you can see this green line on my chart that indicates that there was a future contract rollover. If we go out just to show you what I'm talking about, you can see the previous contract right here, /ESM24, has 5 trading days left in it, and its current price is 54.37. But around 5 days before expiration on the futures of the S&P 500, typically the active contract rolls out. So you can see this says active next to it, has moved out in time. Now the active contract is expiring in September, and you can see that it gapped up about 60 points on that open, which correlates to the same 60 points that we got gapped up right here. So it's not actually a gap, it is just adjusting for the front month contract. Anyways, obviously bullish. We are a little bit overextended from our previous support bounce, and I wouldn't be surprised to see this go neutral sideways for a few days and or give a little bit of a flag pattern back into the 9 EMA. Typically right on futures contract rollovers, I don't like to play it for a little while. I like to give the price chart a little bit of time to digest the move and kind of sort itself back out so that I know that all traders are looking at this correctly and looking at it as a continuation, not a gap and move. So anyways, I will be probably waiting a couple days before I am interested in playing the S&P 500 specifically, but there's obviously strength in the market, so you got to call it what it is. If we go out to the Nasdaq, you'll notice the exact same thing, rinse and repeat. We got our support bounce, we moved higher, got our breakout from all-time highs after consolidation here, tested support, and now it's off to the races. Again, I would personally like to see a little bit of a flag-based pattern come down and give us a little bit easier entry. If we go out to the Russel, a little bit different story on the Russell 2000. You can see that we are actually below all of our moving averages, have come down and have been testing the $2,000 support level. Not going to be terribly surprised to see this go neutral for a little while. I'm hoping that it doesn't just V-shape and come back up into our resistance at the diagonal trend line here. I would like to see this just hold support, clean up a little bit, let these moving averages work their way down, and then line up some kind of a breakout to try to regain some semblance of bullishness on the Russell. But for now, it is off the radar. We go out to the Dow Jones. Again, contract rollover has adjusted and it's bumped it up above its moving averages. Ideally, we will go sideways here, let this clean up a little bit, and then line up a breakout around 39,200. Going out to Bitcoin. Bitcoin has some work to do. This is the chart that I was saying before that I got blasted on for the news right here. Ended up trying to recover the next day, failed, and now we are squarely below all of the moving averages. We are a little bit overextended to the downside in terms of price action. We are sitting on support, but our RSI is basically sitting at neutral, and our MACD is actually just below the zero line, signaling a little bit of weakness. I wouldn't be shocked to see a little bit of upward momentum, probably back up to 67,800, 67,900, somewhere in there, right around the 9 EMA. And then that is going to be decision time. Do we break through that and move up to try to reclaim the 20 SMA? Or do we fail and kind of develop a pinch between the 9 EMA that is decreasing here and the flatlined 50? This is going to be a very, very important price level for Bitcoin to try to hold if we want to see the longer term chart turn itself around and come back up and try to break out of all-time highs. You can see on the weekly chart, it's still fighting to hold its 9 EMA. So on the weekly time frame, it hasn't really done anything wrong. The 20 SMA is still grinding higher strongly. But anyways, on the daily chart, this has some work to do. If we drop it down to a 4-hour to an intraday chart, you can see we had a fake out here below the 200 SMA and have now gotten back above it, but we really need to hold this like $6,100, $6,200 level. If we give out on that on the futures pricing, it could get ugly pretty quickly. So I'm staying away for a little bit, waiting for that to clean itself up and show me if this is going to actually try to power off of our support or if our support might be in trouble. Going out to crude light, had a much more powerful week than we anticipated week prior to last. Last week was basically spent doing absolutely nothing but consolidating once it got back above the 20 SMA and 9 EMA. We do have overall resistance at 78 up to about 78.60. On this, we are kind of testing a bullish thesis. We have reclaimed our diagonal resistance, but we still, like I said, have a bunch of resistance on top of us right here. If we can get a move back up above 80.60 and can take a couple days off, consolidate there, go neutral for a little while, and then break out higher, I will be highly, highly interested in that, playing that as a reversal pattern. But right now, I'm only day trading this instrument, not holding it for swing trades because it still has some work to do until we get up above that $80.60 level. Going out to gold, actually kind of looks similar to Bitcoin in a way, doesn't it? Below it's 20 and 50. 50 is flatlining, not a great look. We have reclaimed our 9 EMA on the daily, but that looks like it is being tested right now on the futures open on Sunday. If we get back above 23.60, I will be interested in potentially playing this to the upside, but we will have an overhead diagonal resistance directly above us at around 23.80. So about a 100-point move potentially there, or excuse me, about a 60-point 23.60 to 23.80. Wow, math. About a 20-point range there. Ideally, we get back above that 23.80 level, go sideways for a couple days, clean up, and then move higher. But again, probably day trading, if anything, in this area. Not interested in playing a long swing trade until we get this cleaned up a bit. Similarly, if we go out to silver, you can see a little bit steeper of a decline, and now we are in an official pinch between the 50 period moving average and the 9 EMA on the top side. Just waiting to see which way this wants to go. If it breaks out above the 9 and shows some strength, there is a pocket back up to the 20 SMA at around $30.50 that could be playable. On the other side, if we come back down and test the support of the 50, we also have a diagonal support line here coming up and converging into that zone to play a role. So it'll be really interesting to see if silver and gold both can hold their levels and try to clean up a little bit and move higher from where they are currently. Dropping out to some of our metals, looking at copper. Not a great look, had been in a fantastic bullish trend for quite some time, but we gave up the 20 SMA and not only gave it up, but have seen enough steep price declines since then to actually curl it over and point it down. We are below the 50, below the 9. Not a fantastic look. Sorry, I got a frog in my throat there, guys. Not a fantastic look. Need some time to clean up. I probably won't be interested in playing this to the upside until we get back above $4.70. And if we do end up breaking down this support level that's formed just above $4.40, next stop would probably be back down to 14.13 and then back down to $4. Excuse me, 4.13 and then back down to $4. Going out to natural gas on the daily chart, just flagging back into the 20 SMA. If we do get a break back above like 2.9, that could be interesting. If we toss this out to a weekly chart, you can see we have a little bit of room to drop here until we get back to the support of the 9 and the 50. So I wouldn't mind a pullback here to about the $2.60 arena, see some support form there, and then try to move higher once again. Staying away from this area of the market probably until we see if it is going to break the 20 or not and come down into that 260 level that I'm talking about. And finally, if we go out to platinum and palladium, here we see palladium trying to break down on support. If this breaks, we're probably retesting the lows from back here at 850. No trade to the upside, so I'm not even going to analyze that. And on platinum here, we're overextended to the downside, could see a little bit of a snapback rally into either the 9 or back up to the 50 as shorts that have been shorting this round come back in and start buying to close. That is always the buying action that starts reversals when you're playing at downside action. It is not actually people value hunting down here. It is people that have been shorting, buying their positions to close out and get rid of that trade. So it'll be interesting to see if this can get some lift off on the backs of that, if day traders start to come in, and if this can actually start a reversal story, or if we're just going to kind of chop around down here between the 200 and the 9 EMA. So the verdict is still out on that. Finally, if we go out to UUP here, on Friday, we ended up actually gapping up a little bit and pushing into breakout zone. We did close back down into this range. We really want to see this chill out and start to move lower again. If we get a close above the $29 mark here on UUP, that'll put continued pressure on the overall equities market. So that's not great. And finally, if we go out, look at our economic data for the week ahead. Monday, we have Empire State Manufacturing Index coming out. Tuesday, core retail sales month over month and retail sales month over month. That'll be an important day. Wednesday, nothing to note. Thursday, unemployment claims, and Friday, manufacturing PMI and services PMI data. So of all of this, Tuesday, Thursday, and Friday are going to be the ones that I am paying attention to the most. And you'll notice that all of these come out for Tuesday and Thursday before market hours. So the market open is probably going to be a bit volatile on both Tuesday and Thursday. Anyways, guys, as always, hope this helps. Let me know if you have any questions. Hit me up in the comments. Give me a thumbs up if you don't mind. I'd really appreciate it. It helps me get the word out, and I will catch you next week.